Good morning to the merger of ESR-REIT and Sabana REIT Fireside Chat arranged by SIAS with both the REIT senior management. Welcome, Donald Hunt from Sabana, Adrian Chui from ESR-REIT, and we also have an analyst from United First, Justin Tang. Thank you, gentlemen, for joining me this morning. So let me get to first the introduction from SIAS. On the 16th of July this year, ESR and Sabana REIT announced the proposed merger of the two REITs. There has been much reaction in the media and about this transaction. Local shareholders have also reacted strongly to this merger. They have raised their concerns like the sale of Sabana's assets at below NAV, as well as accusations of conflict of interest with the ESR as its own substantial stakes in both ESR and Sabana REIT managers. Since then, MAS has come forth to reiterate that the MAS regulatory framework does not prohibit a shareholder group from owning substantial stakes in two REIT managers managing REITs invested in the same property class. In addition, under Securities and Futures Act, there are regulatory safeguards to mitigate potential conflicts of interest. Our goal really today is to address the issues in the minds of shareholders and invite the panel yourselves to take on the questions head on. So this session is conducted for the benefit of minority shareholders who will solely decide on whether to vote for the deal or not. In order for them to make this decision, they will need to be informed on the issues. So hence, we have you gentlemen here, to answer the questions. So let me get to them straight away. Question number one: who proposed this marriage and how did this come about, gentlemen? And Adrian, why at this time during the COVID-19 pandemic? So shall we start with Adrian?
Yeah, hi, thanks David. Thanks for having us on this. I think this is an important platform for both managers, as Donald and myself, to provide some of the questions and also as well as provide some education to some of our retail shareholders there as well. This merger came about because, as you would be, it's known in the market that ESR-REIT has always been looking at growing, given that we have a strong developer sponsors coming on as ESR coming on in 2017. So back in earlier this year, we thought that as part of continuation of our next stage of growth plans after the merger with Viva, we thought that it'd be good to explore a potential merger with Sabana REIT, and I approached the Sabana REIT board as well as Donald to explore a potential analysis of whether the merger makes sense, and that's where we started the ball rolling and leads to the negotiations, doing due diligence, analyzing each other's portfolio, negotiations for the transactions and the proposed terms, and we ended up in 16th of July announcing a proposed merger, which we believe the terms are fair and in the benefits of both sets of unit holders.
I think if I can just add on for that, because we're a smaller REIT. Sabana REIT is one of the smallest REIT in Singapore, ranked number 41 out of 44. So this is opportune timing because we are on unprecedented times, unfortunately, COVID-19. So we are looking at to sustain growth moving forward with all the uncertainty. I think this merger presents that opportunity for us to be able to be on a bigger platform, larger, stronger, to have a deeper balance sheet, and on top of that, this potential to have a re-rating to be included in a global index, and potentially, and this is also a DPU accretive of 12.9%, one of the highest on pro forma basis.
Adrian, only 2 years ago, ESR-REIT merged with Viva Industrial Trust. So you're proposing a merger now. So some of the shareholders have asked, why is ESR doing this? So you've just said, the reasons why you want to do it. By any particular reason why you want to expand further?
Definitely. We always believe that in REITs, size does matters. And our experience with the Viva portfolio merger, where we see the enlarged ESR-REIT post the merger with Viva, we've benefited a lot from the points of trading liquidity. Our shareholder registers has improved. It has opened up a new alternative source of capital for us. Our debt cost has come down tremendously itself, and that we are now able to even access more opportunities in terms of operating efficiencies, getting synergies, investment opportunities are coming to us more often in terms of individual assets, portfolio assets, and all this has been coming to us since the merger. We have become more larger, and it just proves that size does matters when it comes to REITs, whether it's cost of capital, running operating efficiencies, being in more optically visible to the investment and stockbroking community. And that is why we believe that a merger with Sabana will also bring the same benefits to the both sets of unit holders.
Right. Then what are they? We come to the terms now. Can you summarize the terms simply? Gentlemen, who would do this? Donald?
I'm happy to do this. So this is a trust scheme of arrangement. It is not a sale of asset. It is a merger unit unit exchange for new ESR units. And if the merger goes through, it will be on a fixed gross exchange ratio of 0.94, which means for every 100 Sabana REIT units, it will be exchanged for 94 ESR REIT shares. So this ratio is fixed. At the end of the day, it all depends on what the final price for ESR shares will be, and that effectively will determine the price ratio for for Sabana REIT shares as well.
You chose scheme of arrangements because why? You want to be fair to the minority shareholders?
I think it's extremely fair for minority independent unit holders because this is up for voting, and we're looking at 75% of units in terms of shares that needs to be passed on by independent and minority unit holders. Take note that the parties in concert, i.e. the ESR Cayman, Mr. Tong, who's from Wealthy Fountain, would not be able to vote in that sense. So it is a absolute crucial process for unit holders to come out to be able to provide their voice and their consent at voting at the EGM vote day.
The same applies for the ESR-REIT's EGM yes. As well. Mr. Tong as well as ESR Cayman are sponsors, are not allowed to vote on the ESR-REIT AGM. So it's all in the hands of independent minority shareholders.
To add to that, right?
Yeah.
The SIC needs to approve the circular first, and then it gets to the EGM. And then after that, the scheme still needs a High Court to sanction it. So along the way, there are many safeguards that investors can rely on for their interest.
Many layers of protection.
Correct.
Justin, tell us, what is the support like for this merger so far?
So if you look at the street analyst report, none of them are against the merger for reasons that Adrian and Donald have already mentioned. In the REITs game, it's all about size and economies of scale. Personally, I've spoken to high net worth individuals who bought Sabana REIT during the IPO about 10 years ago. They generally are of the view that if this doesn't happen, then it's going to be very difficult for them for their investment in Sabana to see the light of the day. So they feel that they have a better chance if they roll over their shares into ESR, and then from there hope that ESR share price appreciates, then they might get to see the daylight.
So all of the analysts are in favor of this merger.
Yeah, correct. So if you look at Sabana, they've got 18 properties versus ESR 57 properties. So it's quite different.
Adrian and Donald, the 3.5% and 12.9% DPU accretion figures that have been stated for ESR REIT and Sabana REIT respectively have been calculated assuming both REITs distributed 100% of their first half 20 total distributable income, right? However, both REITs retained some of their first half 20 total distributable income. So what would the DPU accretion figures will be if the retained earnings were taken into account, gentlemen?
Maybe I can just go first. In normal market scenario, normal times, in our first half, distribution income will normally be distributed during the first half itself. But because we are in unprecedented COVID-19, and a lot of companies are really looking at retaining some portion of its income for the second half in that sense. So we are no different. All the REITs are doing it. Almost all the REITs are doing it. ESR is doing it. We are also doing it in that sense. So it is also in line with accounting standards as well.
Maybe I would add that the purpose of the historical pro forma is to give unit holders on both REITs a view of what a normalized market, a like-for-like basis it would be. We are in unprecedented times in terms of COVID-19. The measures that we put in place in terms of rental rebates, whether it's legislated by law or retention of cash flows, it is because of COVID. It is a one-time event. It would not be giving a full picture to shareholders if we include the one-time events of the DPU retention. So the historical pro forma financials is prepared such that to give unit holders on both sides a true picture of what it would be like in a normalized market, taking out factors of one-time events. If the numbers are, if the one-time event are included in terms of the pro forma numbers, to let's like for 1H 2020, the numbers will be skewed way beyond what you actually see in the normalized market. That is why the historical pro forma is prepared to provide a like-for-like in a normalized market so that unit holders of both REITs can make an informed decision.
Okay, thank you for that. Let's deal with some of the criticism, shall we? Donald,
sure.
Two vocal hedge funds have criticized the merger in recent weeks, saying that the terms are not good enough and suggesting a number of initiatives the manager could have undertaken to grow Sabana REIT. What do you make of the comments?
If you look at the merger terms that we have, this is the only merger terms that we have on the table since I joined in 2018. We know that in 2017, prior to me joining, the previous board and management had gone through a process of trying to find potential buyers, suitors, strategic partners, but there was no offer altogether. And this is the only offer that we have on the table. Hence, we're putting it across to independent minority unit holders to vote in that sense. A lot of their allegations that they have provided are in a rebuttal format, which we have dissected, and we have actually provided on SGXnet last Friday on the 28th of August. So we urge unit holders to run through these in detail. So there's a whole long list that we have actually explained. In a way, we've been educating the two hedge funds.
I mean, they also liken the deal to you selling your house for about 25% to 26% discount to valuation, which you presumably wouldn't do. So they ask, why are you doing this? There is much unhappiness over this. I mean, Donald and Justin.
Maybe can I take that?
Sure.
So to be clear, right, this is not an asset sale. This is a merger. So this is not selling your house at a 25% discount.
Yes.
This is taking my semi-D with Donald Han, coming together, say, let's take the fence between us away. Let's convert this semi-D into a bungalow.
Yeah.
So in an asset sale like the ongoing Accordia Golf Trust transaction, you basically flog off your assets and then you get a special distribution. What you have left is shares in a shell company with no cash generating potential. This is quite different from the Sabana and ESR transaction, wherein you get rolled over into a larger, stronger entity with a high quality sponsor.
And if I can just add on that, even if you are selling, if you're not selling a house or property, here we are talking about selling a portfolio of 18 properties in a highly regulated industry, which is governed by Jurong Town Corporation.
Yes.
And they dictate as to who the buyers are, which more than 95% are all owner-occupiers. There is no guarantee that you can achieve market price. As evident in the last transaction on the 27th of July, reported by Business Times, on a property next to ours, which is at 1 Tuas Avenue 4, was sold for 32% lower than the guide price. And even our property at 1 Tuas Avenue 4, which we're trying to market in the last 12, 18 months, we found a buyer and we couldn't get approval from the authority. So again, it's a very regulated, and it's not easy to achieve the kind of price you're looking for, unfortunately. David.
Well, so, there's another area of unhappiness. It's really the NAV and pricing. Why has Sabana's REITs unit price consistently traded at a discount to NAV? Is it because its assets have not been effectively monetized? How does the management team plan to improve the REIT's performance?
Maybe I can just explain. Sabana REIT is a small REIT in that sense. If you look at our clarification on last Friday, 28th of August, we did mention that all our properties, in fact, 94% of our assets are all pledged, which is secured in that sense. So while our gearing is low at about 33%, to be able to raise funds to do asset enhancement, or even to capitalize on potential excess GFA of 1.2 million, it's not possible. We can only raise about roughly 25 million in that sense. So we've got to do it slowly, and we got to wait in that sense. So if you look at if you look at the other way, if we can translate 1.2 million of underutilized plot ratio now, if I can do all my asset enhancement now, and I can achieve it in 12, 24 months, which is impossible, I think there is a possibility for share price to move nearer to NAV. So the market is saying that Sabana REIT, you're only worth this much, which is the last 5 years trading at a discount of 26%. It's because there's an inability to execute all this now. As a result, time is a factor, cost of funds is a factor, ability to raise financing for this is also a factor. David.
Justin, any comments?
So again, size does matter, and let the record show, right, that Mr. Donald Han is a real estate veteran with over 30 years of experience. Since he came on board, he has managed to divest of assets of anywhere from double to triple their book value. So I think the allegations swirling around the media seems to suggest that management is not really doing much. I think management is doing as much as they reasonably can, especially given the unprecedented times we're living in, especially with the foreign labor issues across the island. It's not just a Sabana thing. I think this point needs to be very, very clear.
Adrian, why have you announced that you do not intend to increase your offer price for Sabana REIT? Because minority shareholders, small shareholders are wondering why you have done so.
Two main reasons. The first reason is that it has been heavily negotiated with the board of Sabana as well as Sabana management. It's not something that we take it lightly. A lot of considerations and factors, not just NAV, historical trading price, capital structure of one another, how we can value add to each other. A lot of things has been taken into consideration, and that we have negotiated greatly. So that's the first reason, it has been negotiated. Second thing is that I also have to take care of my own ESR-REIT unit holders. This merger is by a trust scheme. You need both sets of unit holders to actually approve. So we have to find a balance where both sets of unit holders actually comes away having a win-win situation. And we believe that what the proposed terms that we have already negotiated for the last, I would say, 5 to 6 months is it has to achieve that balanced outcome that both sets of unit holders actually will be able to have a win-win situation. On top of that, it will become a much larger, sizable REIT, more diversified, and allows us a stronger platform to manage not only the COVID-19 situation, and after COVID is over, emerge out of it stronger and continue the next phase of growth for the enlarged REIT.
Justin, you want to add anything on that? Analysts are happy with the pricing, right?
Yeah, analysts are happy with the pricing, and an astute CEO makes good deals, right? Certainly with if Adrian makes a deal wherein he overpays for Sabana or any other asset for that matter, he will get crucified by his shareholders. So investors need to know that they cannot rely on an acquiring CEO to make good on whatever investment mistakes or losses that they have made.
Donald, I mean,
Yep.
Some ask me why you didn't run a public sale process to maximize value. Have you tried?
So before I joined Sabana REIT as CEO in 21/8 January, in 21/7, the previous board and management actually ran a public process. We had a financial advisor who went around Singapore in the region to scout for potential buyers in any form, and that yielded no results altogether, no firm offers. And to be fair, anyone who's interested would have actually called us, the board or myself, because the news is really out in the market already. When I joined in 21/8, there's much work to be done for me to be able to come up with a strategy to ensure that we strengthen the REIT, which, as what John Steele mentioned, we sold as part of strategy 1 to sell $110 million worth of properties. We brought down our gearing, and we implemented almost immediately an asset enhancement for New Tech Park, and now we're continuing to deliver on a stronger REIT platform in that sense.
Donald and Adrian, for both of you, are you proposing the merger at the behest of ESR, which has stakes in Sabana REIT and ESR-REIT, as well as both REITs managers? Coming to the conflict question, the suggestion is that ESR took a stake in Sabana to run down the business, which is a very serious suggestion. The suggestion is also that ESR wanted to take Sabana REIT cheap. I think we need to deal with this. Is that true, and isn't there a conflict of interest? Let's start with Adrian.
I don't think there's any conflict of interest. In any transactions, there's always independent directors. There are clear rules. That's the beauty of the Singapore market rules and regulations. To have this sort of allegations is actually, I'm very surprised, in a certain extent disappointed. It's because we are actually questioning the very essence of the tip-top regulations that the Singapore REIT market as well as the SGX listing rules have. Now, number two is that this is a trust scheme, it's a merger. Independent directors have to look at the transaction itself, give their opinions, and there are processes and sticks to actually ensure that there is actually no analysis is done properly and in accordance to rules for that. And that from ESR's perspective, ESR-REIT's perspective, we believe that this transaction is good for our unit holders. Size does matters again, and we are very consistent with having our portfolio.
If I can just add, David, if you look at the board of directors, 100% of our board of directors are independent, as opposed to the MAS requirement for REIT board directors to be minimum 50% should be independent. So there are necessary safeguards involved over here. We don't share officers. ESR came in, we don't share any information regarding the REIT. We do our own strategies on our side. So if you look at the independency, I think that has been clarified by MAS in your earlier statement, opening statement, that MAS have really clarified. There is absolutely no conflict of interest between ESR-REIT as well as Sabana REIT.
I think the flow of information is very important. Same as us for ESR-REIT. We do not have any information flowing to Sabana REIT and vice versa, because the ring fencings and the structures are put in place to ensure that such perceived conflicts of interest are actually managed.
So why raising this is it's good for you two gentlemen to clarify this once and for all for the benefit of the minority shareholders. Well, the regulations are there, FSA Act, and the regulator is having a look at it, closer look at it all the time. So SIAS is looking at it. You've answered it, so I hope it is put to rest. Now on the debt, let's move on to the question of debts, on debts. With the merger, the weighted average debt expiry (WAID) will increase from 1.6 years to 3.2 years. Correct me if I'm wrong, providing it with a more resilient capital structure. This is well and good, but some say it does not change the debt covenants term structure, and interest rate on existing debt. Can ESR and Sabana explain how it intends to lower its existing cost of debt with this merger, Adrian?
Actually, in the merger, there is cost savings. As you would see that the new debt that we've taken in is actually a lower cost of debt. And we're refinancing the Sabana's existing cost of debt, which is on a 94% secured basis, remaining FF for about, I think, 1.6 years, with a fresh loan that is 2.5% versus 3.8%, 5 years, and on an unsecured basis. So immediately, unit holders, both sides are actually having a lower cost on top of increased tenure, as David just pointed it out. Now, the second part is obviously after the merger, the enlarged REIT will become 4 billion, 75 properties, much more tenants, much more diversified. The credit profile of the enlarged REIT will be much better, and it will still be 100% unsecured. There are also, I would like to add the third point, is there are criticisms in some feedback or criticism that the ESR-REIT is highly geared at 41%, and Sabana is at 31%, so it's not a like-for-like kind of stuff. But actually, it's no. Unit holders cannot just look at gearing as a number percentage. Lenders take into consideration the debt expiry profile, percentage of unsecured debt, who diversification of the portfolio in coming with the pricing of the assets. The fact that ESR, even at 41%, is able to get new loans on an unsecured basis at a better terms compared to potentially some REITs with secured portfolio is a point in case that actually size does matters, and that having an unsecured portfolio is actually useful immediately as well as for the future growth of the REIT.
And Donald, anything to add?
The 4 banks that gave ESR the refinancing to bring it down from 3.8%, currently what we're paying, to 2.5%, 3 of that banks is our bank. So again, being small is not sexy, unfortunately. It's sometimes difficult to bring the cost of funds down. And through a larger vehicle, through an enhanced REIT in that sense, we're able to now bring it down. And that generally is DPU accretive already.
Could you have removed Sabana REIT's Sharia compliance requirement to increase DPU and lower its cost of debt?
Sabana REIT, if you're looking on a revenue basis, since I was here in the last 3 years, there are probably about 1 or 2 tenants who don't quite fit into the Sharia compliant profile, and these are small tenants, less than 5,000 square feet. So it has least impact onto revenue on the basis of Sharia compliant in that sense. If you're looking onto our credit risk profile, and a lot of are saying that because your Sabana REIT, our risk profile is affected, the answer is no. The credit risk profile as banks sees us depend very much on our whether it's secured or unsecured, the amount of assets that we have. And on our side, we have got 94%, which is on secured basis. They look at our debt maturity, they look at our leases, and the size most important. Size do matter.
As I mentioned earlier, lenders look at the credit profile of the borrower with a whole host of matrix. Debt expiry profile, percentage of secured versus unsecured assets, how diversified and stable are your cash flow in determining the pricing and that. Removing a Sharia compliance do not necessarily improve your credit profile, because your underlying credit profile is still driven by the assets, the cash flows, and your current existing debt structure.
Sabana REIT's unit price sometimes closes quite near ESR REIT's unit price. For example, Sabana REIT's unit price closed at 37 cents on Friday, 28th August, whilst ESR REIT's unit price closed 38.5 cents. Given the 0.94 times gross exchange ratio, aren't Sabana REIT unit holders being asked to exchange? They ask 37 cents of value for 36.19 cents in such an instance. So they wonder, why should they do so when they can sell their unit for a higher price in the open market?
Sabana REIT, just can sell. That's an option that they have to do for them. But of course, we are urging Sabana REIT unit holders to stay in the game, to go into the merger process and to stay invested so that you can partake onto and ride onto the upside, the benefits that the merger creates. Greater liquidity, trading, opportunity for re-rating, opportunity for growth factor, to do AIs, to do redevelopment of combined 2 million square feet of underutilized plot ratio, deeper, bigger balance sheet to be able to finance this. And I think the whole host of this is really, at the end of the day, is to move our share price nearer to NAV in that sense. And that's what we're seeing in the last 2-3 years, as a lot of the industrial REITs got bigger, diversified, and a lot of them has gotten their share prices moving well beyond their book value. And that's what some of the smaller and some of the medium-sized REITs should be doing as well, moving up to be able to be more diversified, to be able to strengthen our position in that sense for growth.
So simply put, to the small man, stay on and benefit from this merger.
Absolutely, absolutely.
Yeah. Is it still critical for Sabana REIT to merge with ESR-REIT, or will Sabana REIT be able to survive on its own if it doesn't merge? What challenges will it face as a standalone REIT? I think they need to know if this fails, what are you in for?
Sabana REIT will survive, all right? If this merger doesn't go through, it will survive in that sense. It's just that in terms of activating the plans that we have 3 very clear refresh strategy. Phase 1 is to sell properties, which we have done, the underperforming ones. Phase 2 is to undertake AIs. I would like to do 2 AIs in a year, but unfortunately I'm doing in 2 years, 1 AIs, unfortunately. So I'd like to do more for growth factor and to undertake redevelopment where we can actually go through redevelopment process and capitalize on underutilized plot ratio. And the third phase, which we hope we could do it this year or even next year, but the plans are faulted because of COVID-19, to go overseas to expand. I think by being a merged entity, it would accelerate our positioning to be able to capitalize on the growth factor, in particular underutilized plot ratio, to be able to facilitate growth in acquiring properties, especially abroad.
Stay with me, and we will survive, but it will be quite a task.
Yeah, right? I'd like to add also, right, for the retail minority investors. If they don't get on board a bigger ship, they'll still survive, but the waters out there are going to be choppy. Since 2017, there's been no any other offers from potential acquirers, and since the offer was announced in July, we have not seen any potential counter bidders come out as well. So that is really the stark reality facing Sabana shareholders. So they need to be prepared. They need to be prepared for the choppy waters ahead if they choose to vote against this transaction.
So the waters will not be that choppy with the merger, Adrian?
I would say that the fortress will probably be strengthened. With an enlarged 4 billion portfolio, 100% unencumbered assets, a larger network that we can leverage on in terms of ESR Group's network for tenants, as well as for potential pipeline of assets. I think it sort of gives us a better, stronger fortress to meet the challenges. The waters are going to choppy. What we are trying to do is to have both REIT unit holders invest in a much larger liquid REIT that has the ability and a higher probability to actually withstand not only the choppy waters, but when the choppy waters has receded, we are in a better position to grow into our next phase of sustainable growth. That's where we are putting to both sets of unit holders in this proposition.
We are all hoping that COVID-19 will be a thing of the past soon, if we can find panacea for the and everyone is hoping there will be a vaccine. Let alone, I mean, the global situation is not likely to be anything better for the next 6 months at least. But bigger, you're stronger. All right, that's the message today. You come in, approve this merger, you are in with the big boys. All right, and the waters will be choppy, but you can manage that, and that you will grow likely to most likely to grow, then. On that note, thank you, gentlemen, Donald, Adrian, and Justin, for your contributions this morning. I'm sure you've taken on all the hard questions. You've clarified a lot of misconceptions. You've clarified all the difficult, questions, and I'm sure the minority shareholders are better educated after this session, and we will have a dialogue session a little later. But for the time being, keep well and stay well. Thank you.
Thank you.
Thank you.
Stay safe. Thank you, David.